Ladies and gentlemen, good morning. I'm Rob Recker, President of Chamber Benefits, Inc., and it's my pleasure to welcome you to this morning's webinar. My role at the Chamber is to help you save money on your most essential business expenses. And we know that when we can save our members money, they reinvest those savings back into their businesses. I want to thank you for starting your morning with us and for being a valued member of the Chamber. Healthcare continues to be a top concern for our members. And that's why we've partnered with our friends at Cigna to offer two distinct health plan options, traditional plans and level funded plans. This morning, we're going to focus on the level funded plans and how your business can benefit from financial predictability and how the medical, behavioral, and pharmacy benefits work together to improve health outcomes for you and your employees and lower your costs. Our speaker this morning is Chris Bayaki, and he has been with Cigna for 15 years and serves as the Vice President of Sales for Tennessee, Arkansas, Kentucky, and Mississippi. Chris is a native of Connecticut and graduated from the University of Connecticut with a degree in finance. In his spare time, he enjoys traveling, playing amateur barista. Chris, I think you're going to have to put some of your favorite recipes in the chat, and spending time with his Australian Shepherd, Kino. Chris, I'll turn the program over to you.
Thank you, Rob, very much. Good morning, everyone. It's very exciting to be with you all today. I'm very excited to talk about the partnership that Cigna and the Memphis Chamber have entered into. As Rob mentioned, we're going to touch upon both of the solutions we're offering, but then we're really going to take a deep dive into the level funding. So I'm going to go ahead and share my screen, and then we'll get into the presentation. So just give me one moment here while I accomplish that. Okay, Rob, can I get a test here that looks okay on your end?
Looks great, Chris.
Okay, excellent. So Rob, thanks again for the opportunity and for the introduction. A little bit more about myself. So as Rob mentioned, I have been with Cigna for 15 years. I do want to share a little bit about my background at Cigna, as I've had several different positions within the organization. I actually started my career right out of college in service operations. I worked very closely with our case installation teams and our service teams as well. And I really got a great understanding of how we service our clients and customers, which was incredibly valuable and something I use to this day. After my time in service operations, I moved over into the sales organization as a client manager and served in that role in San Diego, California for about 4 years. And then after that position, I moved up to Los Angeles, where I was actually selling Cigna policies to small businesses, such as all of you out in Los Angeles and Nevada. And then a couple years ago, I moved into this position as Vice President of Sales for what we call the Mid-South, Tennessee, Arkansas, Kentucky, and Mississippi. So let's get started with an overview here of the solutions that we're offering in partnership with the Greater Memphis Chamber. So we have two solutions, as Rob alluded to. The first solution is our small group fully insured offering. This is going to be for clients that have 25 or less employees. And this is going to be a traditional small group policy. I'm going to highlight the differences between the two offerings. And the major difference is, I would say, on the underwriting side, on the small group fully insured policy, that is something we call guaranteed issue. In other words, there is no medical underwriting there. Those plans are filed with the state, which, as we get to the next bullet here, what that does, it sort of restricts the benefits that we can offer. We sort of have certain plan designs that we can offer and rates that have been filed with the state of Tennessee. So a little bit less flexibility on the benefit design there. And then in partnership with the Greater Memphis Chamber, we are offering a 2% discount. Unfortunately, on our premium, unfortunately, that discount will not apply in the small group space. And that's because we need to file those rates with the state of Tennessee, and they're not eligible for that discount. Moving over into the level funding offering, and this is going to be our exclusive offering if your business has 25 or more employees. So the differences between these two products, the underwriting on the Cigna level funding, it actually is medically underwritten. And what we do there is most times we're looking at a few different things. Number one, we're looking at the demographics of your population. We're looking at where your membership is located. We're looking at the age and sex factor of your population. We are using claim experience if we have that. If we don't have that, then we're using our pharmacy analytics tool to get a read of the utilization of your population. So in that instance, on the level funding plan, there is a possibility that Cigna will decline to quote, and that's what we mean by medically underwriting versus guaranteed issue. The benefits, something that Cigna is really known for is we have the ability to completely customize our benefit offering for you and your employees. So rather than having standard ready-to-go plans, we can actually change a copay here or there. We can change the deductible, and really we can work together in partnership with your insurance broker to make sure that we are implementing benefits that are best for your business and your employees. And then, of course, the 2% discount that I alluded to earlier certainly will be applied to every Cigna level funding proposal that's greater than 25. So as Rob mentioned, today we're going to spend the most, or the majority of our time, I should say, talking about Cigna level funding. And Cigna level funding is, it's primarily what my team and I sell. For this past January, we sold 125 policies across Tennessee, Arkansas, Kentucky, and Mississippi, with the majority being sold in Tennessee. And 90% of those were level funding policies. So this has really been a successful product for us at Cigna and in the Mid-South. And I would say it's a product that's trending in the marketplace. We're seeing that more clients are interested, more brokers are interested in the level funding concept and product. So really excited to get into some of the details of it today. What I would start with level funding is it is a type of self-funding. However, it's not as scary as a traditional self-funding. So it has the benefits of self-funding. Mainly, you as the employer will benefit when claims run well. You'll benefit financially, and I'll get into the mechanics of that. Additionally, you'll have access to robust data and analytics that can help you better manage your plan. Also, there are premium tax savings, just as there are with a traditional ASO or self-funded arrangement. However, I said it's not as scary as a traditional ASO arrangement or a self-funded arrangement. And what I mean by that is the downside of level funding is not as great as a self-funded arrangement. And I'll start with simplicity. The level funded product is extremely simple. How it works, and we'll get into this a little bit more with some graphs and charts, but just like a fully insured arrangement, you as the employer will pay a fixed monthly payment. So whether your claims are zero or millions of dollars in a month, you're going to pay a fixed monthly payment. This is exactly the same as a fully insured arrangement, so it will function exactly the same. You pay the monthly payment, Cigna pays the claims, regardless of what those claims are. So in that instance, it becomes very simple to administer this plan, which is one of the perks of Cigna level funding. The other thing that's important to mention is when you think about self-funding or ASO, one of the primary concerns, especially for a small business, becomes cash flow. And if there is a large claimant out there, $1 million claimant, and unfortunately, we're seeing more and more of those pop up, in a traditional self-funded arrangement, sometimes you as the business need to pay that claim, front that money, and wait to be reimbursed. That is not how Cigna level funding works. Again, you pay the premium, we pay the claims, and it functions very much like a fully insured arrangement. So in that instance, you're able to get the benefits again of level funding without the downside or the risks that are associated with a traditional self-funded plan. We've been doing this for a long time, and I have a nice chart that will show sort of our history on this product, but it's been 15 plus years. We were actually the first level funded plan in the marketplace. We have to give credit to Great West. Cigna purchased Great West, and we purchased this product. And we primarily purchased Great West to gain access to this product, to be able to offer self-funding to small businesses such as yourselves. So we have a ton of experience on this product or with this product, and we've had a ton of success. We currently have 8,000 plus clients that are level funding at Cigna and over 1 million customers. 60% of our clients have achieved an average surplus of $58,000, and those are clients that have been with us for at least 3 years. So we'll get into how the surplus works, but the majority of our clients are benefiting from this product in the form of a surplus, which is how they're benefiting financially. So now we're going to pop into a little bit of the history. So as I said, this product is really trending in the marketplace, and I would give Cigna a lot of credit for that. Back in 2008, we sold our first Cigna level funded health plan. In that first year, we grew 133% on the level funded product. 50% of our employers in 2012, we sold on the level funded product. This was a big deal for us. We were traditionally selling a lot more fully insured policies to smaller businesses, and bringing self-funding down to small businesses was sort of risky back in 2012. But because of how the product was designed and limiting the downside and protecting the cash flow, it got more businesses comfortable with the product. And then 1 out of every 2 new Cigna clients were level funding in 2012. In July 2013, we saw the success of the product. 2 out of every 3 level funded clients were receiving a surplus that had been with us for 4 years. In January 2014, we introduced our next evolution, where we actually started offering level funding on the dental as well. I can't see the date here on this one. My little bubble is blocking me. There we go. In 2020, we had $50,000 in average surplus to our clients, and 65% of our clients received the surplus that had been with us for 3 years. And as I mentioned earlier, in 2022, over 8,000 level funded clients. So I point all of this out just to demonstrate that we've been doing this for quite a while. It's been a journey. It's been a successful journey. And we fast forward to today, where one of the, I would say the most successful markets at Cigna are primarily selling this funding in the marketplace. Okay, I mentioned a chart that's going to show the level funded nature of this product. And this is the chart I was alluding to. I also mentioned earlier about how the payments are going to be level and function a lot like a fully insured. So why don't we focus on that for a minute and talk about how fully insured works. So we have our rate, we have our enrollment, we multiply the enrollment times the rate, and we get a total monthly premium, and then we get a total annual premium. That is the exact same as level funding. And as I mentioned previously, the claims do not impact that. There is only one variable that's going to impact what you as the client pay month after month. And that variable is the same as fully insured. That's enrollment. So if we look at the chart that has the dark green and the light green, and then a box at the end, what I really want everyone to take away here is that the height of each column is the exact same. And that represents your monthly payment to Cigna, or you can say your monthly premium to Cigna is going to be the exact same. So this chart assumes that enrollment is not going to change month after month. This is really how we get the name level funding, is the payment is going to be the same month after month. How it works, the product works in the sense that when we look at this chart, there are two different shades of green. The dark shade of green is something that we call fixed costs. That's going to include the insurance aspect of the product, and it's also going to include the administrative fee that you're paying to Cigna. The dark green is the portion of the money that is going to be paid to Cigna and never come back. There is no opportunity to win on that portion of the rate. The lighter green is going to be the portion of the rate that you as the employer are going to be able to participate in. This is what I meant by when I said earlier that you can benefit financially when claims run well. If the claims that actually pay out are less than that light green, then you as the employer are going to receive a surplus. We do require you to renew with us to receive that surplus, and then that surplus will be applied as an administrative credit in the 4th month after you renew your contract with Cigna. Your share of the surplus is going to be 50-50. So we do enter into a partnership on each of our level funding agreements, where if there is a surplus on the product, we actually share in it. You as the client get 50%, and we at Cigna get the other 50%. So we are in this together. This is an example of a billing statement that's going to be available to you as a Cigna level funded client on our client resources portal. And I wanted to show it today just to walk through and further demonstrate how the product operates. I want to highlight that what we're doing here is we're sort of looking under the hood of the insurance policy. And we're showing you the different components of it. This is really no different from any policy, but self-funding really allows visibility into how the plan functions and operates. At the same time, I don't want to lose sight of how simple level funding really is, from the standpoint of we still multiply that enrollment by that total cost on the right-hand side, and we get your monthly premium and we get your annual premium. But it is important to know what portion of the rate you as the employer can win on or participate in. So let's walk through this bill. Over on the left-hand side, we've got our plans. We can offer many different plans at Cigna. We can offer your standard PPO plans. We can offer standard HRA plans. We can offer HSA plans. We have a full suite of the type of plans we can offer. And again, as I mentioned, those benefits can be customized. So when you're working with your insurance broker and your insurance broker is working with your sales rep at Cigna, we can work together to build a customized plan. And we typically always start by matching exactly the current benefits you have with your, or you currently have with your current carrier, but we can deviate that as you best see fit. Next, we have our tiers, and I think we all know we have flexibility on this as well. We do standardly default to a 4-tier rate, but we can go all the way down to a 2-tier rate. Next, we have our enrollment. These are your employees that are electing these plans, and if they're choosing to cover their dependents as well. Next, we have that administrative fee and the stop loss insurance. And to get a little bit into the weeds here, what this is covering is the admin fee that you as the employer are paying to Cigna for us to administer the plan. This is the network, this is customer service, this is underwriting, etc. There's a lot, health and wellness programs. There are a ton of things that are covered by this administrative fee you're paying to Cigna to administer the policy. This also includes stop loss insurance. And there are 2 different types of stop loss insurance on a level funded plan. You've got individual stop loss. The individual stop loss is going to protect your ability to earn a surplus on every single member on the plan, employee, and also their dependents. What it does is it protects us against large claimants, and so that one individual, one large claimant on the plan does not completely blow through your claim funding and eliminate your ability to earn a surplus. Individual stop loss can be 1 claim, it can be hundreds of claims. So we have that stop loss insurance built in. We also have aggregate stop loss insurance. And the aggregate stop loss insurance ensures that you as an employer are not going to pay any more than what we showed previously on that chart. That level premium will not pay any more than that, even if your claims are much more than what that premium is. So together, the admin and the stop loss premium, they come together to create what we call the fixed costs. And this is the amount of money, again, that's going to be paid to Cigna and will not come back to you as the employer. There is no opportunity to participate on the fixed cost portion of this product. You can think of this as very similar to fully insured. The claim funding is the next column, and this is where you as the employer can participate. So it's really important when you see a level funded proposal, and not just from Cigna, because I understand that there are other carriers out there in the marketplace that are quoting level funding as well. And I encourage you to take a look at those also. It certainly doesn't hurt to evaluate options. But what I think we do at Cigna better than the rest of the carriers is that we give you as the employer the best opportunity to win on this product. And the way we do that is by maximizing the claim funding and minimizing the stop loss premium and the administrative fees. So we're setting you up for success to participate in your claims and receive a surplus. Let's bring some numbers to this. I think it helps to sort of understand the concept. So there are 2 scenarios here. Claims are lower than expected. That's what we want. Or claims are higher than expected. We're going to run through each example just to demonstrate how the product operates. So on the left-hand side, this is what we're hoping for. The claims are lower than expected. We've got $2 million in claims funding, and we've got $1.5 million in claims paid. That leaves us with a surplus of $500,000. When we do our year-end reconciliation, we end up returning $145,000 to you as the client in the form of a surplus return and administrative credit in the 4th month after you renew with Cigna. Again, you do need to renew with Cigna to receive this. and we keep the other portion. Again, it's that partnership. We're in it together. I do want to bring your attention to something called a terminal fund, but I don't want to overcomplicate it. When I showed that graph earlier with the level payments, included in that is the terminal fund. So everything I'm about to talk about is sort of accounting on our end. There's no additional work on your end. There's no additional money that you're paying to Cigna. It's all built into the premium you're paying every month. And then in the 11th and the 12th month, we do some accounting to create a terminal fund. Terminal fund is for run-out claims. Run-out claims are claims that are incurred while you're an active client with Cigna, but they don't become due or they're not paid by Cigna until you terminate with Cigna or after you terminate with Cigna. So we need to have some money on file to pay for those claims. And that's why we build this terminal fund. Our actuaries estimate that claims lag about 1.25 months. And that's the time you incur a claim to the time a claim is paid. So we build a terminal fund of 1.25 months of claim funding. And again, I mentioned that it's really back-end accounting on our end. Full transparency on how we do that. In month 11, we take 50% of your claim funding, we move it to the terminal fund. In month 12, we take 75% of the claim funding, we move it to the terminal fund. We keep this terminal fund on file until you terminate from Cigna. When you terminate from Cigna, you walk away. There's not an additional dollar due to Cigna, even if you're in a deficit, and we use this terminal fund to pay those run-out claims. So in that instance, it goes back to the simplicity. This becomes very simple, a very simple transaction, and we're able to cover ourselves for those run-out claims. Let's move to the less desirable outcome, which is claims are running higher than expected. In this instance, in the example, we have $2 million in claim funding. We've got paid claims of $2.2 million. So this is a deficit of $200,000. Cigna will cover this and pay this. And there are two outcomes here that may occur when you're in a deficit. So what happens is we consider how your policy ran. We're going to issue a renewal. And then there are two outcomes. You renew with Cigna, and we always hope that you will. It's never our goal to win your business for 1 year. We understand the disruption it causes to change carriers. We understand that your employees and their family members are in the middle of care. So we do not want to disrupt that. We want to be fair with our renewals, and we would like for you to be long-term Cigna clients. Let's say you do terminate, though, in a deficit position. You walk away with no additional money due to Cigna. I think that's really important to note. I spoke at the beginning about how level funding limits the downside. In other self-funding arrangements, there are penalties when you're in a deficit. There are no penalties when you're in a deficit with Cigna. The more desirable outcome is you renew with us. We come to an agreement on a fair renewal, and you take that renewal and you continue on as a Cigna level funded client. We wipe that slate clean on day one of the new policy. You do not start that new policy year 2 in a deficit. So I wanted to point that out. I think it's very important. So those are sort of the in the weeds on the level funded program. I do want to review some FAQs that we've gotten in our illustrious history with quoting and selling level funding across the United States. So how are my level funding plan costs determined? They are determined by a world-class underwriting team. And I'm very fortunate here in Franklin, Tennessee. I get to share an office with our underwriting team, and they are very good at a very difficult job. When you think about it, they are essentially predicting the future. They're predicting how your claims are going to run using data, that as much data as they can get their hands on, but it surely isn't an exact science. And it certainly isn't an exact science for small businesses where there isn't a whole lot of credibility in the data that we do have. So we do the best job we can. And I do believe this is our strength at Cigna, is our underwriting team. I would say that they're the best in the business at properly pricing these policies and giving you all as clients the best chance to win. A little bit of how we do that. Again, we use your census, and the important part of why we need that census is we're determining where your employees and their family members are located. In every geography, we have contracts with providers that determine how competitive our rates can be when we issue a policy. Why it's really important for us to know where they're located. Something that is really important for me to note, one of our most competitive areas across the country is Memphis, Tennessee. So we have very competitive rates for your businesses. Demographics are important. Obviously, the younger the population, the theory is that the less in claims utilization. So that's going to impact our rates, and our rates will be more competitive in that environment. Benefits and plan design, of course. You know, a high deductible health plan is going to be lower premium than a copay PPO style plan. If claim experience is available, we will utilize that, but I do understand for most small businesses, it is not available in a fully insured arrangement. One of the perks of Cigna level funding, and I'll get into this in a bit, is we have robust data and analytics. So you will have claim experience with Cigna level funding. When we don't have claim experience, we utilize our pharmacy database to price our plans. And this is sort of an evolution of the industry in the last 5 years, I would say, where we run your census through our pharmacy database, where we can actually get a read. It's de-identified, but we can get a read. It will predict how your population will run or utilize the benefits, both from a pharmacy and a medical perspective, and it's forward-looking. So we have experience that's retrospective, and then we've got our pharmacy database that is prospective, looking forward. And we use all these tools to price your plans as best as we possibly can. As I've mentioned, we've got our preset monthly rates that include every single component of the plan. There are no hidden fees or anything associated with a level funded plan. How is surplus share determined? So this is determined up front. The surplus share arrangement will be 50%. And as I've mentioned several times, and I do like to highlight it, you must renew with Cigna to receive that surplus. I will be fully transparent with you that there are level funding plans where you can keep a surplus if you terminate that policy. I will also be transparent that in my experience, those policies aren't set up really on the pricing that give you all that great of a chance to win or earn a surplus. And that goes back to how they're pricing it, where there's not a whole lot in the claim funding, and it's mostly in the component that you don't participate in. So Again, I encourage you to look at all options, but just when you're looking level funding, always be aware of what that split looks like, especially when they're allowing for that surplus share when you do terminate your contract. What happens when I have a good claims year? This is what we're shooting for. You're going to earn that surplus. And then we'll come to terms at renewal. In the 4th month after renewal, you're going to see credits on your billing statement. So you're going to see your bill, and then you're going to see a credit. That's going to be the prior year's surplus return. What happens when I have a bad claims year? I do want to underscore this again. We do our year-end reconciliation. There's no surplus available. There is not an additional dollar that's due to Cigna. And there's no cap here on a deficit. It can be millions and millions of dollars. And that really is the aggregate stop-loss insurance working. 5 things to remember. So if we walk away with 5 things, here are the 5 things that we want you to walk away with. Again, it's that knowing what you owe, being certain of what you're going to pay to Cigna during the year. And that's something that when we're looking at these policies, if there are CFOs on the line, or you all work closely with CFOs, we are going to know exactly what you're going to pay to Cigna during the year. Again, assuming the enrollment stays the same. And I think that's really important. Most clients and brokers will hear ASO, and one of the concerns is the variability, the up and down. And we're not going to know what we're going to pay at the end of the year or month to month even. That's not the case with level funding. Opportunity to share in savings when claims run well, but you won't pay any more when claims run worse. Premium tax savings. This is really important as well. So there's only premium tax that's going to be due on the stop loss insurance, just the individual and the aggregate stop loss insurance. And I mentioned earlier that we do a really good job of minimizing the fixed costs and maximizing the claims. That also provides a tax benefit. I would say on average, and it does vary case by case, but on average, our stop loss premiums make up around 25% of our total premium or total cost. So there's premium tax savings there, of course, versus a standard fully insured arrangement. No deficits carrying forward year to year. And then, of course, I highlighted our underwriting team earlier. I've got to highlight our sales team as well. I might be partial, but I believe we have the best sales team in the business, in the industry, in Memphis, across the state of Tennessee, and then Arkansas, Kentucky, and Mississippi as well. So we really do take great pride in pricing these products correctly. The last thing we want to do is write a level funding policy and then you don't win on it, because then you're going to lose faith and confidence in Cigna, and that's not what we're here to do. So we want mutual success on this product and a long-term relationship. I've mentioned several times data. To me, this is one of the most important aspects of a healthcare plan. I understand how much you all are paying for your benefits program, and it's a lot, and costs are continuing to rise. To me, I think that every employer should know where that money is going. And with Cigna level funding, we completely take the hood off of everything. We have robust analytics. Not only are you going to see month by month what you're paying in claims, or what Cigna is paying in claims on your behalf, I should say, versus your claim funding, so you can keep score on your surplus. Well, you have access to analytics, and the analytics are going to show where those claim dollars are being spent. They're going to show you top pharmacy drugs from a cost and a volume standpoint. They're going to show you when your employees and their family members are utilizing emergency care, when really that care could have been handled at a primary or urgent care facility. We're going to run the same analysis for virtual care. And we have a robust virtual care offering. Several years back, we acquired MD Live. And so we have virtual primary care, preventive care, urgent care, dermatology. So this data is critical. And we don't just pull this data and send to you or your insurance broker. We sit down with you, your insurance broker. Sometimes we sit down with a clinical executive at Cigna, and we review this data together. And we use this data to make fact-based decisions on where we want to go moving forward. Could be as simple as education. We use this data to educate the population on how to utilize urgent care, how to utilize generic medications, maybe just knowledge about where urgent cares are located or how virtual care works. We can also use this data in conjunction with the ability to customize benefits. So we can see that we are completely overutilizing emergency care, and it's costing the plan a fortune, and it's putting our surplus at risk. So we can increase the cost share on emergency care. And maybe it helps individuals to think differently before they go to the emergency room versus another alternative. We also have a robust wellness program at Cigna, and having all this data at our fingertips allows us to determine actionable steps that we can take to improve the health of your population and roll out a successful wellness program. So I just want to underscore how critical having access to this data is. And I would just point out that I think our standard package is about 13 pages. We try not to overwhelm you with data. Behind the scenes, this program probably has about 75 pages worth of data. So we work together, determine what's going to be most impactful for all of you, and then we'll get together and discuss and figure out next steps. One other thing that I'll just point out is a lot of clients will look at level funding as sort of a middle ground or a dip the toe in the water of self-funding. Let's hop into level funding, give it a few years, 3 years. Let's see how we run, and then we'll make a determination. If you all hop into level funding and we review this data semi-annually and it's looking great, we're earning a surplus, the utilization looks fantastic, we can then transition you into a fully self-funded arrangement where you're going to save real time, you're going to pay as you go on the claims, and you don't have to deal Cigna in for 50% of your surplus. In that instance, you actually will be able to keep your group number, your account team, your customer service numbers, your employees will be able, and their family members will be able to keep their ID numbers. It's all on the same platform. Or the flip side of the coin, there, and our underwriters are wrong, or we're wrong, or your risk profile changes. And unfortunately, a large claimant emerges. But actually, if all this data at our fingertips, we can utilize this data to move back into a fully insured arrangement. So it just gives us more information to make the best decision for your business. I mentioned our health engagement team. We're going to hear a lot of different buzzwords in the market about wellness or engagement or vitality. There are many different buzzwords out there. At Cigna, our mission is to improve the health and vitality of those we serve. And to me, there's no better way that we do this than our health engagement team. A lot of other wellness programs out there, they really focus on two things: money, wellness funds, and also technology. We do those things, and we do those things very well. We can offer your business a wellness fund that can sponsor activities that are going to promote a culture of wellness. And we have a wellness platform as well. But I believe what separates us are the individuals on our health engagement team that are going to work with you all to build a customized program of wellness. Each of your businesses are different. Each of your businesses has a unique culture, and not every wellness program is going to be the same. So our team of consultants, we're going to sit down with you all, and we're going to figure out how to promote and how to develop a program that's going to work best for your business and your employee population. And I don't think it's going to be a surprise to anybody on this call that employees are looking for this. This is a big driver of satisfaction right now, which is huge. It's not just the benefits, it's what else. So we've got your backs in that regard as well. And I'll just point out, one other thing here is when you move into an ASO arrangement and now you're participating financially, anything you do to improve the health of your population over time should improve your ability to benefit financially. Not to mention the impact that it has on your people. If your people are healthier, they're happier, they're more productive at work, they're more productive in the Memphis community. So it's great for business, great for the community as well. And then over time, we should see that manifest in better claims and more of a surplus back to you as the employer. One last thing that I always have to point out, and then we're going to get to some Q&A. We're right on time. At Cigna, we have 24/7 customer service. And I always point this out because a lot of our competitors, most of our competitors, do not have this. But we understand that health happens at all times, and it's very important. So we're there for you, your employees, and their family members 24 hours a day, 7 days a week, holidays included. When you need us, we're there for you. Finally, next steps. I ask you all for an opportunity. Give us a shot when your insurance policy is up for renewal. We can also take a look off renewal as well. I encourage you all to talk to your insurance broker. They'll be very familiar with how to quote with Cigna. If nothing else, we would love to issue you a proposal and show you what our level funding offer could look like for your business, and perhaps give an opportunity for our sales team to talk to you a little bit more, get a little bit deeper on all that it means to be a Cigna client. Also, if you don't currently have an insurance broker, I'd be honored to have a conversation with you about your benefits. And my phone number is here on this slide. Rob, I'm sure, can share my contact information with you all as well. I'd be happy to have a conversation. So with that, and finally, we've got about 9 minutes left, so I'm 1 minute over. We do want to open it up for questions, but I do want to just take the opportunity to thank you. I understand that time is very valuable, and giving me an hour here on this topic is a lot. So I really appreciate you all joining today, and I hope to be working with you all soon. Rob, I'll turn it to you for questions.
Wonderful, Chris. Great job this morning. Thank you very much for that. Very insightful presentation. So our first question is, does the small group have to be age banded?
Rob, that's an excellent question, and to be honest with you, I'm going to have to take that one away. But I will do that, and I will get you an answer. We actually have two different teams at Cigna. So my team and I, we focus on the 25 plus level funding, and there's a new Cigna small group team that participates under 25. But I will be certain to get us an answer on that and circle back.
Okay, great. I will take that information you send to me and I'll send it directly to the group. Next question. So do you have to wait until your policy comes to a conclusion to be able to switch over to signal level funded?
No, absolutely not. You don't. We are happy to take a look at policies throughout the year. So whenever you all would like to take a look at level funding, we will be ready to go.
Fantastic. And another person wants to know, does Cigna offer ancillary benefits or products that can be bundled in with the health plan?
I'm so glad you mentioned that. However, whomever it was that raised that question, yes, we do. So we offer medical, of course, but then we also offer dental, vision, and supplemental. And by supplemental, what we mean there is accident, critical illness, and hospital, which are really great products when you think about really any plans. But if you as a business are offering plans with large amount of cost share, high deductible plans, your employees are going to have a lot of exposure there if something happens. By offering the accident, critical illness, and hospital plans, they offset that exposure. So they're really great. It's a really great option to consider. We offer all of those through Cigna, and we also will offer integration credit on the medical if we bundle those plans. So if we bundle dental, we will discount our medical rates by 1%. And if we bundle supplemental, we will discount our medical rates by 0.5%. So there's up to 1.5% of bundling there that's available. Unfortunately, we do not provide integration credit for vision. And that's simply because the premium is rather small on that product. And then the product that's sort of not involved there is life and disability. We divested our life and disability product. We sold it to New York Life several years back, so we do no longer offer those product lines. I will also point out that those products are only available greater than 25 as far as the integration credit goes.
Okay, very good. Thank you. And another question, what happens if the company doesn't qualify for the level funded through underwriting? What are their options?
Yeah, Rob, that's a great question. So first I would point out that we're going to do everything we possibly can to issue a policy. However, it is possible that we decline a policy for the Cigna level funding. Most times that happens is when our pharmacy analysis tells us that there's one of a few conditions on the plan that can typically be between $500,000 and $2 million. And there's simply not enough premium on your entire population to cover that. So if we were to write the policy, we'd certainly lose and probably lose a good amount of money on the plan. That's typically the high level of why we'll decline a policy. We'll do everything we can to issue one. In the instance that you have less than 50 eligible employees, you still have the option to go to Cigna Small Group. and Cigna Small Group is guaranteed issue. So in that environment, you will get a quote from Cigna Small Group. If you're over 50 eligible, that's where, unfortunately, you're probably going to have to go to the broader market and see what you can get out there on the broader market.
Okay, excellent. Thank you for that. And last question before we wrap up. Does the member have to ask their broker for that chamber discount, or does the broker apply that discount when they're quoting the chamber member? How does that work?
You know, Rob, I would say, as you're talking to your brokers, if you could mention this partnership to them, I don't see any harm in that. We've also asked all our brokers to be aware of this program and to ask us to apply the discount. And we also are trying to catch and make sure we're applying the discount. So I think it's all hands on deck to make sure we're providing the very best rate we can, which of course includes the 2% discount. So chances are, if you don't mention it, we are going to apply it. However, I don't see any harm for you all as employers when you're contacting your broker about your interest, just mentioning the discount and making sure we get it applied.
Fantastic. Thank you very much. Well, ladies and gentlemen, this concludes our webinar. I want to personally thank Chris and the team at Cigna for partnering with the Chamber on these two great health plans. We'll be doing some other webinars. I put that in the chat. Our next webinar is going to be on that health, wellness, and employee engagement. That's going to be on April the 8th, excuse me. And then on May the 14th, we're going to be bringing in Cigna's pharmacy expert to talk about Cigna's drug plan and how that pharmacy integration will save you and your employees money. Lastly, I want to thank my colleague Tunjali for the show producer behind the scenes. And I want to leave you with a couple of other programs that we have that can save you money on your workers' compensation insurance, and also savings with Office Depot for all your office products, furniture, technology needs. And I put links to those programs in the chat. So thanks again for spending part of your morning with us here on the webinar, and I hope you have a great day. Thanks, everyone.